Hello, Warriors. Alexander, Richard, Jays. How are you guys? How's everyone else doing today? Day before the inflation numbers.
Good morning. Good morning.
Hi. How are you, Kane?
Yeah, good.
Go ahead.
Regarding and you're so right to mention it. Regarding this tomorrow's CPI.
Yeah.
We have to bear in mind that the weights are updated, and there was a tweet out from one of the strategists we tend to follow, saying that it should overall tilt the weights in the direction of goods getting increased exposure due to large pandemic expenditure jump on goods. That means that categories such as used cars and trucks will increase in significance, which will likely lead to a short-term upside risk to the CPI data, and in the longer term a risk for it to come off. So we have to bear that in mind when the number will come out tomorrow.
Yeah, I was kind of planning on, I think the metals are railing into the number, looking for a hot print.
Yeah.
So to me, maybe around 1835, I might attempt shorts, and silver maybe up around 23.5 or so.
Yeah, exactly what I said in the chat room a couple of minutes ago. I'm trading it from the long-term long side, but then my add-ons, I'm looking to offload a little into 23.48.
Okay.
On silver, and then wait for the CPI to come out tomorrow.
You have anything in the currency sector that's compelling to you to do before the number?
Compelling. The commodity currencies, the antipodians are quite well bid. The Kiwi Dollar came back into its channel. It's a downward channel, but it's back into the channel through 66.
You want to show your screen?
Yeah, hold on. Let me push you aside, and then
that's right.
Where is it?
It's here. I'll hit stop share. So go ahead. You're coming up now.
Do you see it?
Takes a second. Yes. See
so
it.
That's the Kiwi I was showing this morning in the room, and you see we had a break lower.
Right.
And but now we are back into this channel, so around 66. Let's call it 45.50. We should find a few bids, and there's a good level of resistance right here around 67.05. So we are like in a 60 pips range, which could decide upon either side after tomorrow's CPI.
Yeah, it's usually constructive when you do what's called a throw over, or in this case, a throw under, even though you could still call it a throw over. And then it gets back inside the formation. That's usually your go signal.
Yeah.
So okay. So the commodity currencies look good to you.
Yeah, the Aussie as well. It's doing a pretty decent rally as well. But
are you in the camp, Kane, that the dollar topped last week? That was it. Or can there be one more surprise to the upside in the dollar before it falls apart?
It depends on which dollar you talk about.
U.S. dollar.
If you're looking at the euro dollar, this is what I was trying to show, what I was trying to point out yesterday.
Right.
This last jump up to close to 115, and now we did it again after the ECB. And here now it's a question mark. Are we going to see the same if it goes back down below 113.90 tomorrow? Maybe we are going for a leg lower again. If it's holding 113.90 figure, then we for sure will have a decent look at the 115 again.
Yeah. Question mark reminds me of the Riddler. That'd be a great handle. Was in Batman, the Riddler? He had a question mark. Because it's always a riddle, isn't it?
Yeah.
What we do. And crude had kind of a negative day yesterday, and it's not recovering. I think that's going to be maybe the big story.
It could be.
Yeah.
I stopped sharing. Okay.
You did?
Oh, no,
I still see
will.
it. Oh, okay.
Yeah.
I like your charts. They're very soothing to the eye.
Thanks.
Stella, are you here this morning? I heard you were running around doing
Good
some
morning. Yeah,
Good morning,
we're all
buddy.
good. We're all
Yeah,
good.
that's good. So
Yeah, so
one of your daughters doesn't like needles, huh?
no, it doesn't like anything. But we made it, and the building is still in place. You know, she didn't bring it down, so we're good. We're good.
All right.
So we have inflation tomorrow.
Yeah.
Metals are rallying into it now. Is that? I find myself struggling to understand if it's a high print.
Yeah.
You know, which scenario is better for metals? If it's a high print or a low print? I think short term, if it's a hot print or high print, I think that's not good for the metals. But I mean, obviously, in the long run, with inflation where it is, excuse me, you know, every asset is going to be inflated eventually. But let's see what we get tomorrow. I still think we might get one more dollar squeeze. Like you asked, Dale, do we think this is it for the dollar? I think we probably will get one final hurrah in the dollar, which will or should coincide with one final leg lower in the metals. How much, I don't know, but I think, unfortunately, I think we might have to wait for the March FOMC for that.
Yeah.
But I think that's going to be
like a sell the rumor by the fact when they will
hike.
Oh.
Yeah.
Yeah.
And we're getting I don't know what lit up the S&Ps. Must have been some earnings after the close, but Blake was saying yesterday, if you're patient, you might have a chance to get short up here around the 46.20 level.
46. Yeah, 46 is what I'm looking for.
Yeah, so maybe a good number. And I noticed that yields are a little bit softer today. They're down 3 bips, but they still haven't really done anything wrong. I think there's a little divergence here between this high and this high, but it sure looks like it wants that 2%. So, this is going to be the key to watch, I think, for the number tomorrow. See how the notes react. What do you guys think here?
Well, yields are definitely taking a breather after this really strong leg, and it was really 2 days that.
It was one candle. It was
yes.
a 2-hour candle that did it. That was the NFP.
Yeah.
So and a lot of people are embracing higher rates now. I say, it's not early to be embracing higher rates.
You look at historically where 10-year US has been, apart from the COVID lows. I mean, we're, if you zoom out, we're practically at or near all-time lows. So it's still we're still at low levels. The question is, what happens? What do central banks do? Because they're telling us they're going to do one thing, and we know how they're going to change. And if or when the Fed turns and turns dovish again for whatever reason, then I think we could challenge the all-time lows in yields. We could see zero. I don't know, but it will take a big shift from.
It'll take a shock, I think, a risk-off type of thing, like I don't know, something geopolitical. Yeah, but I'm just saying that up here. We've had a nice run. I don't think we're going to 260. And I know some guys that are pretty good, whose work I respect. They're looking for highs between 2 and 220. And one of them thinks we could pull back under 1% before the next big rally in yields. And the only thing I could think of that would cause that would be risk off. Can you guys think of anything? Or just maybe crude, a big break in crude might do something like that, right?
Maybe, but I think with the Fed telling us what it's going to do, I find it impossible for rates to go lower. If they're going to be hiking, and because they stop in QE in March, and they're going to be hiking as many times as the market expects, I don't think there's any way that 10-year US can stay here. If Fed funds go to 1.5%. How can 10 years stay at 190? I find it very difficult unless the market thinks we're going to have huge slowdown and they're going to have to reverse again. So in the short term,
Yeah.
I think in the short term, I'm bullish rates. I think if we do break 2%, like I said yesterday, we'll get the next 10, 20 basis points very quickly. And then we see what risk is doing. We see a lot of things, but I think
we have to wait to see what growth and the economy is doing once they start really hiking, right?
Well, I know
that's why I also am in doubt that they are going to go 50 BP straight ahead. And I don't know, is it really their plan to start heavy and then slow down again?
I don't think they have a plan.
Okay.
I mean, I don't know.
We will disagree just a little bit. I think their plan was clear from May, June last year, but then they had to speed it up due to the inflation. But the plan they have, I think, to normalize. Well, the new normal.
Yeah. Okay. So
copper's and hey, good morning, guys. How you doing?
Good, Blake.
Good morning.
Hey, good morning. I was going to say that they do have a plan. I mean, it is to normalize rates as quickly as possible before, before something else happens, right? It's really just to reload and make sure that they have some powder in the keg, right? I mean, so Cayman,
but have yields been waiting around for them to do these things? I mean, haven't yields in a way priced in some of what the Fed is going to do?
Yeah, but there's a mechanical effect to rates, and I always am a little careful when saying the market expects the Fed to do this. When they changed tax, so they are going to hike rates. What it means that a lot of investors, a lot of asset managers, like even central banks and stuff, they need to hedge stuff. So it pushes rates higher before they actually start to hike rates, because that's the expectation. But then I can see rates hang around here until they effectively have raised perhaps a couple of times, and then see exactly where the economy stands. Well, that's how I see things anyway.
Okay, I just wanted to show one more thing, Blake, and then you take over. I don't know about you guys, but crude volatility is tough, and I just noticed this. Sometimes I trade it when I'm bearish crude. It's an ETF. I think it's twice, 2 times, and this is a pretty rare formation. You wouldn't get it in crude because it's 24/7. This trades mainly with stock market hours, and left an island bottom, a 2-day island. So, that could be at the minimum a warning sign about being long. And if you
as you speak, crude is actually trading below 88.50 now. So it's breaking low right now. So
so maybe that island's going to stay intact. And anyway, I think at least. Book your long oil shares. I mean, it's been the outperformer. It gave nothing back during risk off, and everyone loves it. Try and find a WTI bear nowadays.
Okay, well,
they don't exist.
They don't, and
they've lost money being stopped out, like I did a few times.
Well, you know what? You're not the only one, and I joined you. So don't think that you're a lone wolf McQuaid there. So guys, I'm going to announce it right now. The dollar is going to hell in a handbasket, and you just whatever dollar holdings you have are going to be sliced in half, like within the next, I want to say in the next couple of weeks. So just get your stuff prepared. So I'm joking. I'm actually joking about that. I just thought I'd make some random statement like that just to try to get everybody's attention, because everybody's kind of sleeping at the wheel today. We're waiting for CPI coming out. Sorry, I just had to shake the tree a little bit. I mean, we got CPI coming out tomorrow, and everybody's kind of like
I was running to the closet to see if my cash was still there and if it was cut in half. All right, go ahead.
Well, anyway, Stelios, Cayman, I'm glad you guys are here, because we're all waiting for tomorrow. But let's start off with the S&P and talk a little bit about that.
Nice call.
I'm looking. Yesterday, when we broke the 45.20, I was telling all of our traders, and I'm pretty sure I mentioned it here. Like we're range bound between the 200-day moving average and basically the 4,600. And here we are, making our way up towards 4,600. Everybody's, pretty bullish risk up here. But you got to be careful. I mean, just longer term, we're developing this, what I think is a head and shoulder pattern. It's better seen on this chart. I have it kind of, but this is a long time coming. So when I say long time coming, it's going to take a long time to develop this chart if we are indeed making this. And I should actually move this over here a little bit. It'll be easier to see something that looks like this, right? We may be, spending the next couple of months really carving out a right shoulder. And one of the reasons why I'm a firm believer that we are in a topping pattern, and just remember, our head and shoulder patterns are topping patterns, guys. That's what they are. Okay, so they are long-term reversal patterns of a trend that's been established. So I think that the S&P is going to be, you can sell rallies and you can buy dips probably for the next, couple months. Now I may be wrong, and also we could also push up towards 4,700 before we roll over. But I think that this 46 to 4,700 level, somewhere around here, is going to offer us some pretty strong, resistance for the most part. So that's something that we should all be paying attention to, going into the remainder of the week. Now, K-Man, you mentioned something about the inflation data tomorrow might be a little wonky. Can you explain to us?
That's what I said it right at the start. Been reading this tweet from Andreas Steno Larsen, saying that it should overall tilt weights in the direction of goods getting increased exposure due to the large pandemic expenditure jump on goods. It means that categories such as used cars and trucks will increase in significance, which will likely lead to short-term upside risk, but medium-term downside risks compared to earlier weights. So we might get a number which shows a very high one tomorrow if he is to be believed.
Okay, so we could have a really high print. Now, what do you think? How do you think the market's going to take this? First of all, what happens if the print is below expectations? Because now you've got everybody, and if let's talk this out just a little bit. If you and I are discussing this, or I say you and I, let's say you and I, the Fence Post, and everybody that's listening on this show right now, we're all talking about this. What happens if the inflation data comes in weak? Because now everybody's like expecting a strong, like a strong print. What happens in that event?
Well, I think the market will probably go. Well, it depends how much weaker.
Well, let's just say it's slightly below forecast, because everybody's expecting a hot number. So let's just say it's slightly below forecast.
Well, then you're going to see yields should be coming back a little bit, but then the real interest rates will go higher. I don't know if it's lower. Probably dollar will get sold against the stronger ones, which are the antipodians and probably even the euro in that camp right now.
Yeah. Well, if everybody's talking that this data is, Richard said, I'm the Fence Post. Good one. But let's just say that we have, a strong inflation number, but everybody's already expecting it now. I mean, because, we're not the only ones talking about this. So it's a strong number. Does the market react to it now? I mean, do we see much?
In today's market, I think whatever happens, whatever is the number, there will be people waiting to sell dollars in a way, because that's just the way the market trades it for right now. We have seen 3 or 4 attempts to go back below 114 in euro dollar, for instance. It's holding. Yeah. 113.90 break could see a few sellers then, but then you're already running into the 113.60 after that, and I'd expect the market trying to sell dollars, whether it be on a dip or a rally in the dollar. But is it the right position? I'm still not sure. For me, euro dollar has to take out 115 to run higher.
Yeah, I agree with that too.
Could just be ranging.
I agree with that too. I want to give you guys like my kind of view of the dollar right now. I'm looking at it as a bear flag pattern. I'm trying to sell rallies up to the 38% retracement up at 96. That's what I'm trying to do, which basically would put the euro dollar, let's say roughly around 113.70 to 113.90 roughly. That's, in other words, that's where I'm trying to buy it. I actually bought the euro. If you guys just kind of clue you guys in, this is the ForexAnalytix community, just to kind of show you guys what's happening here. This is the trades room. So you can see right in the trades room this morning, I actually just cleared out the euro dollar for 35 pips from a position I was in since I got hit Monday night. So early Tuesday morning at 114. And then I just spun out of it at 114.30 something. I'm trying to buy dips to 114. And even if we dip slightly below 114, I'm willing to buy it. But that basically puts the dollar index up towards 96. And when you say, K-Man, that as what the market's trying to do here, or what the market is doing is selling dollars, I believe that to be the case. I was actually texting with one of the guys that I traded with for several years. He's a very, very big trader. He's like, man, the euro's had a lot of attempts to get below 114. This was yesterday. It had to get below 114. It's not doing it. And he goes, that's a warning right there if anybody is bearish. And I agree with that. But I also agree with what you have to say, K-Man. Unless we get above 115, it's hard to get bullish. But at the same time, here's your 115 level, and if we crack this, you have to take these. Here, I'm going to zoom in a little bit here. If you can go to the highs way back in May of 2021, you can connect those highs, and then it takes us to the current trend line, which realistically is going to intersect when we get up towards 115. So that just really tells me that if we break through 115, we should see the 200-day shortly thereafter. That's kind of what I'm looking for at this point. And I know, K-Man, I know you're bearish.
I'm not. I'm neutral.
Oh, you're neutral. Okay.
I was selling rallies just because it didn't break 115.
Oh, got it. Okay. I'm still trying to buy dips. I'm still trying to be a dollar bear at this point. But just because I'm a dollar bear doesn't mean I'm short the euro or long the euro right now. I was long it yesterday or 36 hours ago or whatever, and sold it this morning, and I'm still buying dips. But it's trying to navigate getting too aggressive at this point. Versus anything else. Hey, but let's talk about a couple other things. We talked a lot about, the dollar, and especially going into tomorrow. I'm also still really looking at these emerging market currencies. I was talking to Gareth Soloway yesterday, and he was referencing an ETF, emerging market ETF, when I was interviewing him. And he was talking about the, strength of the, of this index, and he's looking to buy it. But, one thing I've noticed is that the Mexican peso, the rand, both have been pretty strong. But, but the flip side to that is they're not breaking down either. So, I mean, the dollar's not breaking down against them. And when we're in a situation where I know stocks are getting up towards some pretty key resistance. How do you guys feel about selling some emerging market currencies up here? I mean, I know a lot of people are trying to lean into them, but when people weave, I like to bob sometimes. So what are your thoughts there?
We have Banxico tomorrow, and I won't trade the MEX until then. It's the risk is that they put rates up at 6%, and I'm a little allergic to be short a currency for very long when the rest of the world is around 1% and they are at 6%.
Yeah. Okay. Well, that makes sense. But so, what would provoke you? And I know you trade I know you trade the peso, from time to time. And I happen to be starting to trade it again right today. So, what would provoke you to trade the peso? Just for the traders out there who are more new to the trading game.
I think we have to look at how to trade those things. I would like to look a little bit through the inflation, just look at economic data, how they are holding up, or global, because Mexico needs the US, right, and needs Canada, and needs so if it's going to be influenced by those countries too. For as long as the US holds up, MEX can do pretty okay, I would say, against the ultra low yielders. And but if broad starts to falter, I would buy dollar MEX without hesitation.
Okay, all right, that's good to know. And that's good. And so I want everybody to hear that. That's one of those things. If you automatically go, oh my gosh, stocks are under pressure, one of the first things that K-Man's going to do, and same with myself, is I'm going to look at pesos and rand and look to sell them. Now, that doesn't mean you have to stay in a position for, days, because you're going to pay, interest on those positions every night. But on an intraday basis, yeah, if you see the stock market really coming under pressure, usually you're going to get a reaction from those pretty quickly. So, hey, I just want to mention this really fast, guys. If you have not registered for this announcement, this is an announcement webinar. It's called Supercharge Your Trading.
His younger brother is in the picture.
Yeah, it's like, I don't know where we found this guy. That is definitely not Grega, and it's definitely not.
Is he going to get into a Maserati?
He wears a suit like a European dude, so it's got to be some European guy. That's because if it was an American guy, it'd be like very over. It'd be like too big. But anyway, and we'd have a stomach. Yes, correct. What were you going to say, K-Man?
I thought it was Dale in his Men in Black days.
Yeah. There you go. Dale's Men in Black days. Anyway, okay, enough about that. One of the things I just want to mention about this is one of those webinars that we're going to make a pretty big announcement that could potentially change the way you trade the markets from here on out. And it is free to register. It's free to attend, and you're going to want to attend. And the reason why I say that is because, good things happen to those special people that, to attend these types of things. So, I just want to say you guys should come listen in. It's going to be, it's a big thing for us as a company, for the ForexAnalytix organization. And so, I really think it's going to be able to be very awesome huge for a lot of you. Yeah, I do.
Could be huge for people.
One of the things that, if you guys have been listening here for 5 years, or you can go back the other 12 years before that, one of the things that you would always hear from me, and always still do, is that we as a company, ForexAnalytix, what we try to do is we try to reshape the bell curve for the trader. There's a common perception that, as retail traders, your success rate of being a successful trader is not very good. And I've had people in our community now in the ForexAnalytix community. Here's a trading room, or in the general chat room. Like, some of these guys I've been chatting with, for, like, Amir has been with us for 12, 13 years. I've met him in person 6 times, people, a lot of these traders have been in our chat rooms for a long time. Rick
says 20 years.
Rick's 20 years. Well, Rick, I don't know, 20 years. Rick, is that?
You don't hang out for 20 years.
Rick said,
going broke.
He says 2003. I guess it was 2003. Holy cow. Yeah. I mean, gosh, it's been that long.
You're getting older, man.
I know. I don't. It's crazy. Anyway, thanks, Rick. He goes, can't do math. Yeah. Well, no, you know what? That would be 19. Anyway, the thing is I think we are doing our best and to reshape the bell curve. And, if we can give you the most opportunities to be successful, that's what it's all about. I can't force you to buy anything. I can't force you to sell anything. I can't lead you to water and make you drink. I mean, we can have a chat room where traders, it's our community, right? We have traders that are putting in their trades. They're like, hey, I'm buying the euro here. I'm selling the euro here. I'm buying lumber here. I'm selling lumber there, whatever it is. What you decide to do with that information is, up to you, but at least you have ideas and people to lean on and traders to talk to. And, you have a community, and that's what it's all about. And then on top of that, with ForexAnalytix, you have all this analysis with all these, like, oh, there's a setup. Oh, that's a bull flag pattern. I know what to do with that. So if it breaks here, I'm going to get long. Okay. So, and then you got analysis to go along with it. You could go, here's my Elliott wave count. Oh, that's what Greg is looking for. Oh, he's looking for higher prices too. Wow. There's a confluence between what basic technical analysis and Elliott wave analysis is telling me. Look, that's what it's all about, right? Is just having the data, the information, and a community around you to help you become successful. We can't guarantee success, but we're going to, gosh dang it, give you the most tools possible to help you and, try to be successful. And so anyway, that's what it's all about. So make sure you guys do go to this webinar. It is the Supercharger Trading. The link is in the description, or the link is in the description. The link is in the chat. I'll put it in there if any of you guys are coming in a little late. So this goes to everybody in the chat box. Make sure you guys register. All right. I'm done. Stelios, K-Man, Dale. Yeah, you guys have a great day. I'll see the ForexAnalytix community. You guys are in the community right here where it says F.A.C.E, join webinar. See where it says this little button right up here. In about 45 minutes, it'll say webinar on, it'll say morning edge. I'll see you guys there in 45 minutes. That's only for the ForexAnalytix subscribers. I'll see you guys there. All right. Bye.
All right. Have a good one, Blake, Stel, K-Man. Thanks for your analysis, everybody.
Great day.
And remember to click to register for the webinar.
It is I think it is at, if I'm not mistaken, at 10 a.m. Eastern.
Okay.
But when you click the register button, you'll see the time there. I think it's 10 a.m. Eastern. And remember, if you got to be there. Okay. All right.
Yeah, that's it.
That's
gotta
it.
go. All right.
Gotta go.
And guys, our guest today, Kirk Hines, he had a conflict today, and he'll be back with us a week from Friday.
Oh shoot! I was wrapping up because I thought you were done. Or you had to go.
He had a guess. Well, he's a meteorologist. It's going to be very interesting, for people that trade interested in ag commodities and natural gas and so forth. So
that'll be really cool.
He also is interested in maybe talking to you about having some kind of weather section, his stuff, Blake. So I'll put you guys together after the interview. But tomorrow we have an interesting interview. So get your rabies shots. Danny Naz, the pup of Wall Street, will be with us tomorrow. I'm going to find out why he's only a pup on Wall Street tomorrow. So
well, that'll be great. And I just want to remind everybody, make sure you're here for the CPI data tomorrow. We'll be here for the release. It's the biggest data of the week. So we'll see you guys there. All right.
All right, Blake. Go ahead, man.
I got to run. All right.
All right. Remember, everyone, don't just count your pips, count your blessings. And we have Shy Girl on Friday. So, we get everyone in. Just like Blake said about the bell curve, I try and bring in good people for you to, also edify you. And that's a wrap, everyone. Don't just count your pips, count your blessings. Keep some powder dry and get ready to react to the reaction. That's the way I plan to do it. React to the reaction tomorrow. Adios.